Alright, hello ladies and gentlemen, welcome back to another update on this public investment playlist series. If you follow this channel for quite some time, you know that since January of 2022, each month I'm contributing to this public investment portfolio, so I'm disclaiming all of my positions. I created this portfolio from scratch. I started investing like 40 euros per month, and as the time will pass and I will get a career boost, salary increases, hopefully I'll be able to contribute more to this portfolio, or maybe I'll have some bumps along the way and have to contribute month, but the strategy is always each month to contribute whether the market is up, whether the market is down. If I open Trading212 app, which is the brokerage that I'm using for this playlist, you can see that the total value of portfolio is here a big number, 3,733 euros. If you ask me if I could invest all this money in a single month, probably wouldn't be possible, but if it's out throughout the months, well, it's more achievable. This is the strategy that I follow. Sorry, I'm a bit dyslexic today, I don't know what's going on. And yeah, it will be much easier for you to stick with this strategy than just lump summing. Everyone has a different approach. Just because something might make sense for me, it might necessarily be the best one for you. Take everything that I say with a grain of salt. This is not financial advice. I do me, you do you, and let's keep with this video. I use this playlist as a time capsule so that I can look in a few years or look back and rewatch the videos like, oh, this was a good decision, this was a bad decision, and hopefully we will see how this will turn out. Without any further ado, I want to keep this fast pace. The life is a bit a mess, I'm full of work, everything is a bit chaotic in this room, but you cannot see because you're focused here on the camera. But straight to the point. The portfolio right now is with the performance of 20%. If you followed the episode from the previous month, you would see that we were averaging on a 16% because the market dipped quite a bit, but since then it rebounded. As always, you will see sometimes when I open these portfolios up, sometimes it will be down, and hopefully it will average out across the years. Before I jump into showing my portfolio, I just want to hop on a calculator, a compound interest calculator, and put, let's say, 3,000, because today we will contribute another 150 euros. So initial investment 3,800 bucks. Monthly contribution, right now I'm contributing 150 per month, and hopefully I will be able to increase this as I get older. Length in years, right now I'm 26, so let's say 30 years, because I'm working this portfolio almost like a plan B for retirement, so I have a really long time horizon. Maybe you have a different approach, maybe you want to retire early, maybe you don't want to have such a long term, maybe I'll need this money for a house down payment, maybe I will have kids, maybe for a wedding, who knows, maybe for a trip around the world. Well, I cannot foretell the future, but let's put a length of 30 years, because that's what I'm willing to do. I don't need this money right now, hence I'm doing this redirecting to the investment. But more on that on this YouTube series. I already have what I deem as my strategy and what I feel like it's appropriate for my financial goals. So, estimated interest rate. Right now our portfolio is with 20% interest rate, but let's put 15 to be a bit more conservative, and just for reference, the market average is around 9-10%, the same as for gold, but hopefully I want to be able to beat the market. If it's probably, well, only time will tell. And if we compound this, you will see that in 30 years this portfolio, you can see here that the blue line is my contribution. So in the beginning the contributions are representing most of the bulk of the portfolio, but here on the final years is where it really the wealth starts compounding, and this is the beauty of compound interest. So I'll be able to achieve 1 million euros by doing this. Of course, if well, actually, let me see if I can put a variance of 5%. Let me see. So we have here 3 lines. So the blue one would be if I were more or less in line with the market. So you can see here the variance below 10%, so I would end up with 300,000. Will that be able to buy a house in 30 years? Most likely not, but only time will tell. If I leave my money in a bank account, it will also lose all of its purchasing power, so let's try to be a bit realistic. If I remain with the 15% interest, we will get sorry, I was seeing the year, not the year 30, but the year before. So after 30 years I would have 1 million, and if I somehow manage to maintain the return that I'm currently having, I would end up with 3 million. Let's see, maybe that will be enough to rent a room here in Lisbon, since prices are so crazy. Without any further ado, let's jump right into the portfolio. And sorry once again, I don't know what's happening with me today. Let's go. Alibaba flat, Google is up, Amazon is up, SVSL basically flat. Farfetch was one of our investments that we lost everything there, so there's always risk involved when you're trading and investing in the stock market. Intel down, one of our bets. The S&P 500 ETF is up, which represents the bulk of this portfolio, as well as the information technology, or ticker symbol QDVE, for those of you that are interested. They are the bulk of portfolio, and you can see these are the ones that are carrying the performance. JD.com, a Chinese stock, is down 10%. Johnson & Johnson up. Meta Platforms, it's really up because we managed to buy this when it was in a really low period. So as you can see here right now, Meta is at 500. You can see in the horizontal blue line, and on the dashed gray line you can see that our entry price was 146. So this was a really good play. Starbucks was one of our recent plays, so we managed to actually have a good timing when it was dipping below. But maybe in 5 years, will Starbucks still be a thing? Will the stock be absolutely hammered down? Will it be up? Only time will tell, but I always like to buy them when they are a bit cheaper than usual. Of course, we are not immune to a stock market crash, and maybe when that happens I'll be able to contribute more, or maybe I'll be not emotionally prepared to do so, but we have this series anyway, and it's always a good exercise to reflect on that. We can see more Chinese stocks, and then Disney down 5%. You can see here more or less the allocation, so we have 19 different assets, but on these assets you are also including the ETFs, which represent the 3 biggest positions on the portfolio, and each one of these ETFs is like a basket of stocks, so we are really more exposed to more companies than this. So the S&P 500 technology information sector, so it's exposed to all of these companies on this IT sector. The S&P 500 normal is the 500 biggest listed companies on the S&P 500, and the Vanguard FTSE All Worlds it has over like 3,000 companies there. So basically it's almost, you're diversifying too much. You're basically investing in the expectation that the world will be better in a couple of years, which I hopefully it is, but in case everything goes down the drain, I guess our investments will be the least of our concerns. So let's jump into the pies. You can see here that we've been creating pies throughout the months ever since January of 2022, and if I had invested all my money back in the pie that I had created, because we switch these pies at each episode more or less, we only had these 6 investments, and we would be up a total of 23%, 23.41% actually. And you can see some are really good plays, others not so much. So the Chinese stocks were way super pricier back then, and you can see the ETFs were way cheaper back then as well. But if we had here, let's see, if I had invested all my money on, let's say, no, we had this, why was December of 2022 such a good month? Let's see what we had invested back then. Oh, we actually had 15%, we lost 15% of the portfolio on Farfetch, but still Google was a great play, and here Meta Platforms was the best decision, which is carrying the entire trade essentially, hence the 112%. So if I had invested all my money there, I would be having a crazy return, but I like to spread out my risk throughout the months, day in, day out, and I am emotionally detached from all the fluctuations, because I also don't view it as super healthy to see your portfolio every single day. Now it's up, now it's down, and if you really needed that money, let's say to pay the rent for the next month, you will be in a not so happy situation. You can see here, if I had invested all my money in June of 2024, I'll be losing 5%. Let's see what I had invested back then. So the S&P 500 was at higher price, and this will change obviously at each episode that you watch here. I already created the pie, I'm gonna show it to you. I already have other episodes where I create the pie directly, but here, since the time is up the essence and I like to keep these episodes quite fast paced, we have here the 30%, so the bulk of it is going to the IT sector ETF. Then 10% is going to Disney, which is the stock that is currently down. 10% is Google. Google is a bit down. I still have a way lower entry price, but I cannot be picky. I cannot wait for the stock to dip even lower. JD.com, I'm trying to get my average entry price down because it was down. Pinduoduo, I'm expanding this position because the stock recently crashed a bit, even though when I invested it was just a 1% of a monthly contribution or something. Alibaba, Tencent, more Chinese stocks, and the S&P 500 and all the world ETF. So it's a different month, and let's go invest our monthly 150. Oops, not 300. We are not at that stage yet, but we will be. Hopefully, future Pedro, that you're rewatching this video by any chance. Let's confirm the buy, and you can see here what is the 150 euros being distributed into. Confirm buy, and this also depends at the time of the day that I'm recording these videos, if the stock exchanges are open or not. Hopefully right now all of them are open, so eventually this will execute to 100%. And we will be able to see how our portfolio right now it's looking. So total value is 142. So let me see why is 142. Okay, so the notification was a bit late, but you can see here that we invested all the money. These 9 cents, it's already a fluctuation that it's happening, and our total value of our portfolio right now is 3,873 euros. Of course, our return just decreased a bit because we just entered the market with these 150 euros, so we didn't really have any time, so it's around 0%, which is affecting the old pie that we had before of 3,700 bucks. Thank you all for watching. Sorry for being super fast paced. As always, I hope I'm here as a reminder for you to contribute monthly to your investment portfolios or be closer to your financial goals, whatever they are, and see you next time. Bye.